It's a top day trade day. Joining us now, Knuckman, the chief market strategist at St. Paul Research, and Phil Flynn, a Fox Business News contributor, ready to go for our trader game. Round number one, rate relief. The stock market rallied as the Fed raised rates. Is this market headed for the moon, or is it doomed?
Well, finally, we've got some rate relief here in the fact that we knew rates were going to rise and the markets digested it and moved forward. So it's just a matter of time before we finish this rate rising cycle. But the important thing to be aware is that was a positive for the markets. And if you look, we've seen the 10-year note yield rally 50% in the last year, but stocks are only 5% or so from their all-time forever highs. So I can view that as a positive.
It is a positive, and usually when you start to get into a rate increasing cycle, the stock market generally does very well. But it usually lasts for about 2 years. Generally, after about 2 years, then we have a little bit of a correction. So you might have 2 years of significant gains before you have a major correction. And Alan's right. I mean, a raising interest rate environment is a possible good thing. But the problem is you're trying to do it at a time where inflation is already red hot. So you're going to have to thread the needle, Mr. Federal Reserve, to make sure you don't slow down the economy too much. But right now, the market's saying you're on the right path.
Round number two, commodity cash grab. So almost every industry is now raising prices, but those companies have also made a profit of $151 billion. What's your pick for a profit?
I think if you look what's been happening in the energy industry, there's been a lot of criticism, right? Because they're making money because prices are going up. But that's really reflective of what the market needs. It means we need more supplies. And the only way we're going to get more in supply is more investment. And the only way you're going to get more investment if there's more profit potential. So generally, that's a sign that the industry needs more investment. It also means it's going to be profitable for some time to come.
Demand driven. That's a healthy sign. And the fact is they can raise rates because things are so strong. Companies are making a lot of money and their margins are increasing. So a couple on this list that I like, obviously Costco, and as for energy stocks, they've all relaxed a little bit, but it looks like they're going to make another charge as crude oil firms, demand driven. Marathon Oil is a stock in that list. It looking like it's been traded between 20 and 25. Breakout on 25 sends it to 30. There's still a lot more upside with these low PEs in the energy stocks.
Round number three, staying alive. We saw that recent tech bounce. Now meme stocks are surging. What's next for a rebound rally? Pick a sector.
Well, the sector I like that has been kind of forgotten has been biotechnology. The IBB, the ETF that tracks biotechnology stocks, has been really beaten down, but there have been some big performers, obviously. We had BMY, Bristol Myers up here make new highs. If you look at that biotech sector, it had dropped from 175 to 125. It's making a bottom base. But let's not forget about another sector that was hot, now it's not, is gold has come back down to its breakout point at $1,900 an ounce. I think those metal stocks are a good risk reward here at this level.
And while it's not for everybody, I think crypto is the time to get in. The United States, of course, is moving towards a digital currency because they realize the future is in digital, especially when it comes to monetary. I think that's a good sign for a lot of these cryptocurrencies. And because they're so volatile and they're not for everybody, you might want to look at the ETF Riot. That's one that tracks a lot of the cryptocurrencies. And of course, if you have deep pockets and a high risk tolerance, you can look at the micro futures at the Chicago Mercantile Exchange Group, and they trade micro Ether and micro Bitcoin. So that might be a way to get some exposure as well.
And to get back to Riot had been traded between 15 and 20 and broke out above 20. So it looks like it's made a bottom base. Also keep an eye on Block, BLOK, which is an ETF. It's got a lot of the companies that may not be actually cryptocurrency, but they're the companies that support cryptocurrency. So both of those look really attractive right now.
Here's your bonus round question for today. We are celebrating Women's History Month with the following question. Mackenzie Scott, the ex of Jeff Bezos, is donating a lot of money to charity in the past 9 months. Is it close to $4 billion, $2 billion, or $1 billion?
I'm going to go with $2 billion.
I'm going to pick the bigger number, double it.
I do not believe it. A three-peat win from Alan. The answer is close to $4 billion for the past 9 months. And Mackenzie has given away $12 billion since divorcing Jeff Bezos. Winner, winner, chicken dinner.
That's a lot of chicken.
That is a lot of chicken, but Alan loves chicken. He even sells it. Great job, guys. Go to businessfirstam.com for where to see our show on TV.